Once again, good evening to all of you, and I wish to inform you a couple of things. Smart Finance is a company which is engaged in the stock market research and innovative concept development. We are not a broking company, and whenever we talk about research, we do the real research in this market. So I'm proud to say that Smart Finance is the only one company existed in India which has done some real research works. Our team has brought some unique concept which is known to some of our past participants, those who are joining this session for first time. I'll be informing this Gann angle with volatility technique is an innovation of Smart Finance. Volatility with Fibonacci technique is an innovation of Smart Finance. Pair trade using beta decoupling is an innovation of Smart Finance. So we have brought many new innovations in this stock market. So I have just listed few things out of that. And once again I will tell you, all these methods what we have developed, we have not hidden it behind the carpet. We have not said that this is a method we have developed and only getting lakhs and crores we will be disclose it. We put it in the public domain. People have tested it, people have tried it. People have commented on its success ratio, people have given their view on this success ratio, and people's view, public opinion is very vital for us, though we are conducting this kind of free events to promote those concepts. Same time we are also getting many useful feedbacks from you. So your feedback also encourages us to develop that method and encourage us to improve its accuracy. So today you are going to experience one such method called Gann angle with volatility. That method in detail I will tell you. And if you want to participate some of the events in person in Chennai, Bangalore and Mumbai, then these events are scheduled on 3rd August, 10th August and 17th August. All are welcome in this. It is a free event. If you are located in any of this city, then you please come and join this session and take it as my personal invitations to you. So our aim and objective is you must follow some rational trading technique and you must not lose money in the market. So I will start my session now. Apply this method, intraday trade using Gann angle and volatility. We need couple of informations. Volatility of that particular stock or indices. So volatility, one information we require, and this volatility of the indices or stock must be taken from its 10 days data, 10 days last traded price. So this is my first information I require. Second information I require, the high, the low and the last traded price. So this is the three informations I require. So sometimes I'll be simulating the calculations from the midpoint of high and low. Sometimes I'll be simulating from high, sometimes from low, and sometimes even from the last traded price. So I will demonstrate it with some proper validations, proper logics. Third, I require to understand the Gann angle. So the Gann angle is nothing but, it says that 11 trend lines drawn in different geometrical angle. The first trend line will be starting with say 5 degree means the second trend line will be some 10 degree. Like that way WD Gann has given 11 trend lines For example sake, I have said this 5 and 10. However, all these trend lines maintain a predefined angle as suggested by the WD Gann. And as per this trend line concept, WD Gann has said whenever the price crosses about the third resistance, we should buy. Whenever the price fall below the third support, we must sell. So this is the simple logic of that. However, in my method, I have not diluted the WD Gann's concept, rather I have accommodated the volatility. You must say, why volatility? Why volatility must be accommodated for a successful intraday trade decision? The reason is, volatility, if market is the body, if the price is the body, volatility is the blood. So without the volatility, no price fluctuation exists in capital market. So to make the profitable intraday trade, you must understand the nature of the volatility. So we too have given a scale for the volatility. I have told in many of my webinars, if the volatility is less than 20% per annum, it is known as the low volatility scenario. If it is greater than 20 and less than 40, it is considered as a medium volatility situation. Greater than 40%, it is known as your high volatility situation of any stock or indices. And I have also told, in the low volatility situation, Fibonacci principle gives you good success. So whenever I classify these methods, that means more than 60 to 70% of your trades must give you success. Then only we can say, yes, this method works well in this particular situation. If it is above 20, below 40, then WD Gann's principle gives you good success. Above 40, Elliott principle gives good success. So this was the scale I have given. However, many times traders have requested me, as I have told you, traders' opinion is very, very important for me. So many times traders have suggested me, can you bring a system of trading which works in all kind of volatility situation? Whether it is low, medium or high, we should not switch the methods from Fibonacci, Gann to Elliott. Can we work in the same method in all volatility condition and get the similar type of success? So to accommodate that view, we have experimented and brought this Gann angle plus volatility concept. So this concept gives you the outcomes and it works in all volatility situation. So you do not have to follow Fibonacci or Elliott. Only this method alone is sufficient for that. So in WD Gann's method, the resistances are calculated from the low and supports are calculated from the high. However, to make it more neutral, I am calculating the supports and resistances from the midpoint, or I will be calculating the supports and resistances from the current price. And second, third support and resistance is very important, wherein we have to get a buy or sell entry. So this is what the Gann's principle says. So in our method where volatility is being accommodated, so how we are going to work in? So first we will be calculating the price range from the daily volatility. How? Suppose Nifty is quoting at 7,000 and volatility is 0.5, daily volatility is 0.5, which is being calculated from the past 10 days data reference. So in this case, what will happen? I will be getting the price range, which is nothing but 35 points. So 7,000 multiplied with 0.5 divided by 100. So it will give you 35 point of oscillation. So calculate the price range from daily volatility. This is the first point. Using the Gann angle 11 trend line angle factor to estimate the resistance and support price range. So how you will be calculating? Suppose we are getting 45-degree trend line and 45-degree trend line price support or resistance price range will be calculated in this order. Square root of 35 and 45-degree factor is nothing but 0.25 whole square. This is the resistance price range at 45-degree, and similarly square root of 35 minus 0.25 whole square or double multiple. This will give me the price range, support price range at 45-degree. So this is how I will be calculating the resistance and support price ranges. Now the third point is I have to calculate the actual resistance and actual support. For that, what I will be doing, so whatever the values I have calculated in this particular stage, I will be adding, say, this entire value, whatever I have calculated, name it as X. Whatever I have calculated here, name it as Y. So I will be calculating the last traded price added with X multiplied with 45-degree factor 0.25. This is the resistance at 45-degree. Similarly, last traded price minus Y multiple of 0.25. So this is the support at 45-degree. So this 45-degree is nothing but 45-degree trend line. So same way we have to calculate for all resistances and supports, and we have to take the entry at the third trend line. So let me go to a more precise and concrete example. Assume yesterday, which was, today is being the Monday, so yesterday means Friday. So Friday Nifty has closed, so I'll just increase some font size here. So here Friday Nifty has closed at 7675. I'm just going to give you some rough calculation. 7675, and its daily volatility, which is currently at 0.87, and assume Friday also it was same. Assume daily volatility DV was 0.87. So if I am going to calculate the levels for the Monday, how I will proceed? Friday's price multiplied with 0.87 divided by 100. So this is the 66.8 price point I will move on Monday. This is my assumption. So once I get this one, then I will put 7675. So here what I have done, I have calculated the resistance, means square root of this is 66.8 added with 3.75 degree factor, sorry, square root of that added with the degree factor and whole square. So by this process what I have done, 66.8 price range at each level I have incremented with respect to this degree factor. What is this degree factor? The degree factor is nothing but 180 degree as per the Gann principle, consider as 1. Why this 180 degree equal to 1? Because one solar motion happens from sunrise to sunset, you move one day time, so which makes approximately 180 degree. This is considered as a largest life cycle of one intraday trade. So considering the largest life cycle of an intraday trade as 1, this concept is being developed. 180 degree equal to 1. So similarly, if I am asking you 45 degree, how you will derive 1 divided by 180 multiplied with 45. So this is going to give you 0.25. So we are just talking about Friday. This is the last traded price, daily volatility. Assuming the same volatility was maintained on the Friday, we got 66.8. This 66.8 we have simulated using the formula square root of 66.8 added with this 0.02. So 0.02, the net result we have taken the whole square. And in the right hand side we are subtracting, means square root of 66.8 minus 0.02, and this entire thing we are taking double multiple. So we are getting this resistance price ranges, support price ranges. After getting this thing, we are going to calculate from the last traded price. Last traded price 5675 we have settled on Friday. So here onwards our cycle will start. This says Monday will move through 7676 to 7711, 7710.87, round it to 7711. And my buy and sell entry will start from 7680. If it opens at 7680, I will be purchasing for a target of 7710. If it opens at 7669, I will be selling for a target of 7646. So this is what I have got. So here the cycle theory comes into picture. So till this point whatever we have done, it is only a first cycle. So your first cycle, if I will say first cycle, so your first cycle starts from 7680, ends at 7711. In upper side, it downside 7669 and ends at 7646. This is the first cycle. There is no guarantee that it should open at this particular price 7680. It may open at any price. If this first cycle completes, then your second cycle will start. Second upward cycle will be 7711. So your second cycle will start from 7711. It will terminate at 7746 level. And I have just redlined here 145 degree. I have make it as a very bold and red here. This says my trend will find maximum resistance at 7728 and maximum support at 7695. This is the thing it is telling me. If the first cycle completes, second cycle it will have this kind of phenomena. So 7675. So this is the estimate I have done. What happened today? Today it has opened at 7701. So go back to my calculation. 7701 I have opened. So I have opened above this 7692. I have opened near to this price 7701. So if I look back to my calculation here, this 7680 to 7701, this gap was already being created. I did not find any opportunity to purchase. However, one thing I can do, let me draw one more cycle from here 7701. Let me draw one more cycle and see what it is giving me. This says if it open at 7701, surpassing all my calculation what I have done with reference to the Friday's closing, then I can take the opening price and calculate a new cycle, and my new cycle says that I should buy above 7707, anticipating 7737 will be my maximum target. In between 7719 will be finding out a maximum resistance in this move. So look back into the chart. What happened during the day? So I'll be going for the intraday chart. So what happened during the day? Let us look into that. Let us look into that. So this is the calculation we have done. It is a low volatility scenario. All of you have seen that annual volatility is less than 20. So you are at a low volatility scenario. This is Nifty. Rather, I will take 5-minute chart and I'll just plot this one. And I'll go for maximum. So from 9:15, I can just see that opening 7702 as the chart suggests. It made 7708, made a low here 7695, and this is the first candle 9:15 to 9:20. Then after you have moved to 7714. Then after around 9:55 you have made a highest for the day, which is 7719. What was your calculation with respect to the opening price? So with respect to the opening price as recorded in the NSE, so you have calculated 7719 is my maximum level and 7719 is my maximum level in the upward direction, and if I successfully crosses that one, I can make 7737 level. So you have surrendered exactly this point, not even 1 or 2 point difference. Exactly close near to this point itself, you have surrendered the up move and you have started the down move. And this down move has continued, and what is the low for the day it has created? 7675 was the low for the day. 7675 was low for the day. So let me go for 7675. Till what point you are coming? So you have closed this 7685, 7675 level. You have come exactly till 1:1:4. So if I can say, in the low volatility, whatever the price parameter you have calculated with reference to the opening price, it has worked well for you. You must say, if I am at 10 o'clock, if I am at 9:55, so how I should trade on this? Let me take one more view also here. So say I am at 10 o'clock, 9:55 and 10 o'clock. Closing is 7714. So 10 to 10:05. So 10 to 10:05, this is the period I am here. So 10 to 10:05, that period itself, I am saying that a 10 o'clock period, 7714, this price is ruling. Just you change and draw the cycle from here, 7714. So keeping price range and entire thing intact, you just change this point, you will get the new levels for the entry. It says 7720 above you can purchase and 7708 below you should sell. If you are selling at 7708, you can get comfortable target till 7698. Beyond that it will be little suspicious and little difficult. And same way, if you are getting an entry at 76720, you can get a comfortable target till 7732, and beyond that it will be little difficult. So this is how you should trade as per this particular method. This is how you should trade as per this particular method. So you must say that to do all these calculations and other things, it is little difficult for a trader. So we have already developed a tool based on this same concept. Say this is under the calculator link, you will get it. Under this calculator link, if you just go to this calculator link, the first one, dynamic intraday Gann angle calculator, here you will get this inbuilt things for you. Here only you need to enter whatever the values. So high value, so say today market is closed, we wish to calculate for the tomorrow, so 7719 and 7675, 7719. I'm just going to make the entry here, 7719 and 7675, and I have closed at 7782, and in fact my daily volatility 0.87, which may not be true as per the NSE data it is, but it is better if you can calculate the daily volatility from the past 10-day data. Suppose if you do not know this daily volatility as per past 10 days data, just click on this link and you will be landing here. Just give the past 10 days data and just hit the calculate button. So it will give you the 10 days based on last 10 days price reference, what is the daily volatility. Then just hit a button calculate. So for tomorrow our levels are like this: 7703 above, not 7782. So 7782 we have not closed. Someone has asked current price is 7782. I'll once again tell you we have closed at 7682, not 7782. So here, so using the same value here, what are the things we are getting? Tomorrow if it opens above 7703, you can get maximum target till 7732. So your 45-degree target will be at 7723. If cross over that, you can get till 7733. This is cycle 1. Cycle 1. Similarly, you will be getting one here, sell price if it is generated from here, you can get it till this is 7668. Provided this opening itself, you should get this level. If you do not get, so if you do not get that, then put the current day's high low and current market price, so you will get the appropriate cycle which is suitable for you. So this method of trading in intraday trade, as per my observation and experiment, it has given me more than 80% of the success. So I cannot claim 100%, 80% of the success, and it has given me in a low volatility market, when the volatility of that instrument is less than 20. In such kind of market, my success rate little reduces and it gives me around 60% of the success. So if it is medium to high volatility, then my success ratio works out to 80%. Whenever I claim about the success ratio, I very well take the fact into consideration that how many trades has triggered the stop loss. How many trades has triggered the stop loss. This is also I used to take into account while projecting these levels. However, this success ratio little reduces in the low volatility scenario because it is a range, so wherein the direction is not clear and it gives little bit of reduced result. Then I'll just move into, before going to the other part of my lecture and attending your questions, I'll just spend couple of minutes to explain smart finance product and services. So here the concept what you are learning, it is a WD Gann's concept, and this concept of WD Gann along with a automated software, this course costs you 3,500, and we have 9 varieties of product. If you are going for all these products, then it costs you 17,000. If you do not want this option strategy, then it costs you 12,000 rupees. If you buy it separately, it costs you 26,000. If you separately, it is being bought. And all real-time softwares, it is having an annual fee of 3,500. It is towards our server data, everything. And and we do not currently have the manual addition. However, manual addition software wherein the data you need to punch of your own, that comes lifetime free. So once you purchase, you can utilize it throughout your life. So currently we do not have, but on special needs we can give you that manual addition software also. Any sales related query you can call to Chennai in this below given number or Mumbai at this below given numbers. So this is about our products, and time to time we conduct various events, paid and free. As I have told to you, if you are located at Chennai, Mumbai or Bangalore, we are having free seminars 3rd August at Chennai, 10th August at Mumbai, 17th August at Bangalore. So these are the locations of that. If you wish to participate in this particular program, just come in this page and register here. This page you will get in our home page. If you just log into our website, here itself we have given register for free seminar. So if you wish to participate in any of the paid program which is being scheduled for 7th September at Chennai, 14th at Mumbai and 22nd, 23rd and 24th online, so you can register for this. It is a paid program, so the fees structures are given here. Offline, any place you can join. Offline, the prices are 5,000 for previous participants, 3,000. Only the 7 hours audio visual concept related things will be given to you. In this program will not be giving you any software. If you want, then you need to buy those softwares separately. If you are a previous participant, already you have joined any of the paid program, then the offline batches cost you 3,000, online batches cost you 3,500. So topics for those program is outlined here: intraday trade, dynamic Gann principle, Elliott principle, pair trade. Some finest aspects and rules will be given to you. Though the raw concept what I am telling here, it maintains one great degree of success, but if you implement certain rules, certain provisions in that, then its accuracy will improve to a great extent. So all those concepts you will be learning in this particular program. If you wish to join for this program, then you need to register for this program, then only you will be eligible for that. So any questions associated with the Gann angle principle, and after loading the Nifty data, I'll be analyzing the future. So since today's market is closed, it is saying me 7697 above, 96 above, my trend is up. It can take me till maximum 7752. My trend is down at 7668 for tomorrow. So it is based on a real-time volatility, not for historic volatility. Currently, the volatility of the instrument is only 13.54%. So based on this, I am going to decide my trade. So I am just going for 7,700 call option, which is nearest strike, 7,700 call option, which is currently trading at 56. And I'll just hit in this button. So it is telling me currently the implied volatility option is 10%. Trade is recommended. It is telling me if it is opening at 63, I should purchase for intraday, and maximum I can get a 96 here. If it is falling below 48, I can think of selling this option for a minimum target of 23. This is what it gives. So if you are a straight line trader, if you are just buying some options, taking off some options with respect to your if you are buying some options, then you must look into two factors here. One is the volatility and IV. No point of time your IV should be greater than 30% of the volatility. In this case, IV is lesser as compared to volatility. It is a good symbol. Good symbol for option buyers. If IV is 30% excess of the volatility, 30% excess to the tune of volatility, then in that option time value decay may happen at any point of time. Henceforth, be careful while trading in this kind of options. And we have given a inbuilt tool here. Whenever such kind of situation comes, it will say that intraday trade is not recommended. Suppose if I'll just take one more strike and just see this thing. Suppose I'm taking stock future. I'm taking Axis Bank. I'm just loading that data. I did the future analysis. I'm going for suppose 2100 call option. Let me see. It is accommodating because volatility 33%, IV is 32. Say I'm going for this one. This is accommodating. Go for the put option of say 2000. Put option. Here too it is accommodating because the volatility and IV is having that 30% of boundary. Certain places you will get that intraday trades is not recommended. In that case, you need to restrict yourself for buying that option, rather try to sell that option. When the intraday trade is not recommended, it is giving, that means IV is more better to sell that option. One more very beautiful thing about this particular tool. Say we have now analyzed for 2000 put option. What is the 2020 put option? 2020 put option is at 45. 2020 put option is at 45. Similarly, I'll be taking 2040 put option, which is at 55. So almost 55. And 1980 put option, which is at 28. And 1960 put option, which is at 22. So here if I'll just see some arbitrage opportunity, the fair value of this option should be 21, it is 22, so 1 rupees excess is here. Fair value is 28, it is 27, here also 1 rupee excess value is there. Fair value is 54, it is 55 now, this too also 1 rupee excess is there. Fair value is 44, this is 45, 1 rupee excess is there. 1 rupee excess value is there. So now it is evenly distributed because we are at the end of the market, we are analyzing. Because there is no market is running now. In running market you will find out this arbitrage opportunity. Assume suppose 1960 is having some 3 rupees of excess value and this 1980 is having only 1 rupees as excess value. So what you can do, this 2 rupees of difference, this is having 3 rupees excess value, this is having 1 rupees excess value. Suppose if you wish to take benefit of that 2 rupees, if you wish to take, so what you can do here, 3 rupees excess value is here, so you sell this 1960 1960 put option, 1960 put option. If it is having a 3 rupees excess value, you sell it and simultaneously you can buy 1980 put option, which will be having a 1 rupee excess value. You buy this one lot. So by the day end, what will happen? This excess value, this value of arbitrageness will get balanced and you will get a gain of 2 rupees. So this arbitrage trade also you can do. And if you are doing in arbitrage trade, you can do it in high volume. It is a riskless trade, and you can, if your brokerage and taxes are lesser, then you can earn very good money out of that. Do not expect that all arbitrage value you can get. If it is a sizable 5 rupees, 6 rupees is there, at least 2 to 3, 50 to 60% you can get, means it is better. but definitely it is going to come. By the end of the day, definitely that arbitrage value is going to be balanced, and you are going to get the value as for your requirement. Fine. So